Alright, so here's a quick video on Japanese candlestick charting. Japanese candlestick charting was invented in the 18th century, used to analyze the price movements of the rice trade in China. So what you have here is you have a wick and a candle is kind of how it's described. So if your candle is green, that means you opened at this point at the bottom of your candle and your close price was at the top of your candle. And the reason you know that your open is on the bottom and your close is on the top is because the candle is green, which means that there was a positive move on that day. Your wicks are the extremes. So at some point throughout that day, the price hit above the closing price and below the open price. So that means there was a lot of volatility within that day. So if your candle is red, it's just the contrary. It means that you opened up at the top of that candle and you closed at the bottom of that candle. And then of course you had the volatility on your wicks. So here's what a chart could look like. And these charts could be, the time frame can be adjusted. So you could have your candles anywhere from like a minute. Maybe you could even have like 30-second candles or something, but you could have like a minute candle. So this would be all the price movements within 1 minute, or 1 year. This would be all the price movements within 1 year. Or a month, or 5 days, 10 days. You can adjust that accordingly. So this is what a chart could look like, and that's how you could see the price movements for that. So notice how here you could have a positive green day, and this is a negative day, but technically it was still above the closing price of the previous day. So even though this is negative for that day, the trading was negative for that day, it was still positive. It was still an upward trend from the previous day. And even though usually when candles look like this, there's a lot of uncertainty in the market because they don't really know where to go. The wicks are going to be really, really big, and the opening and closing everybody's indecisive in the market. So this is kind of candlestick charting. This would be like a crash. This would be like a pretty negative day. And then yeah, you could have a positive day. But that's a basic explanation of candlestick charting. Let me know if you have any questions in the comments. Like, subscribe, hit the bell for more. Life could be easier. Have a wonderful day.